Thanks for joining us here this morning. I'm Marlon Bowling, your tour guide to the ag commodities. Had one viewer comment, with the markets is wild, you should be known as the trail boss. I'll take that. Well, thanks for the comment. Appreciate that. Let's take a look at the overnight trade, and USDA said that we had more overnight sales. Let's take a look at what those were. We just got these off the wire just a moment ago. Brand new information here. Soybeans sold to China again, 266,000 tons. Now, following their recent pattern, they always take them for deferred delivery. This time, part of it, 60,000 tons. No, 66,000 tons is for the 22-23 marketing year. They actually say they'll take 198,000 tons now. That's a switch. And 266,000 tons, that was for China, I'm sorry. The 264,000 tons was for unknown destinations. Now, of that total here, the amount that went to China actually, I guess it's pretty even on both of them. They say they'll take 68,000 tons for next year, the rest of it for this year. Both of them are split, basically a third and two-thirds, with two-thirds of it for this current marketing year. So a lot of business, no matter how you slice it. Over 500,000 tons racked up for soybean sales again this morning. Good information for soybean traders. Now, if you look at the overnight trade, here's what happened, and we'll try and make some sense out of this. Overnight, we ended up with the May contract 12 3/4 higher at 738.5, but that doesn't tell the whole story. It was a wild whipsaw session overnight. December corn ended up only 1/4 cent higher at 625. It had been as low as 604.5, and it ended up basically about where it started yesterday. Now, if you look at the soybeans, here's a look at our quotes provided by bar chart. We had the May contract at 1684.25 this morning. That was down 5 3/4 cents, but it had been as low as 1655 3/4. So it came back off of that by almost 30 cents. Now, if you look at the new crop November contract, overnight, we finished up with it at 1478.5, and that was up 1.5 pennies. Now to Chicago wheat, interesting, where we had the nearby March 4 1/4 lower, but you had the May limit up 75 cents higher at 10.59 per bushel. Kansas City had similar action here, where you had the May contract 75 higher, expanded limit up. 10.78 is where we wrapped up. Spring wheat trade in Minneapolis, May 21 1/4 higher at 10.75 per bushel. So big gains everywhere. Let's bring in Brian Hoops of Midwest Market Solutions. Brian, it's hard to corral these markets the way they're jumping around. Do you know overnight in a 30-minute time frame, we had a 64-cent price drop in the Kansas City wheat off of limit up, went down 64 cents in 30 minutes, went right back up to limit up again the next 30 minutes. Corn did similar action in about a 30-cent range. How do you do something like that, and how do you market amidst a condition like this?
Yeah, it's certainly volatile times, Marlon, and it really isn't a market that's following news that's dropping. It is a market that is seeing some large orders coming in the overnight and either taking some profits at limit up, or in the case of like corn and some of the other wheat contracts, it's running some stops. And when those stops get ran, it's a low enough type volume that there's just a vacuum or a pocket underneath it, and these markets fall real sharply, real quickly, and then they start to recover because there's some buying interest coming into these markets, especially anytime that we're lower. And so very chaotic action last night, almost $1 range in Minneapolis wheat from high to low. You've had big swings in the corn market, but at least we're trying to move back to the plus side. And we should be with these export announcements that came out this morning. We've been speculating a lot of this old crop sales are going to an unknown destination. Speculation is that it's China. Outright this morning, China is stepping in and buying some of the old crop soybeans, and that unknown destination is rearing its head as well. So that's going to give us some support. Plus, you have crude oil futures surging once again to the upside. And I think that's going to spill over into the grain markets, especially into soybean oil and to corn.
April crude, West Texas crude, up 683 again overnight at 110.18. Incredible. We'll take a look at livestock right after this. Come on back. Let's go back to Brian Hoops of Midwest Market Solutions. And Brian, Is the live cattle, feeder cattle, and lean hog market complex going to get caught in the crossfire here with everything else going on?
Yeah, I'm afraid it probably is. If the corn market does stay strong today, expect a little bit more pressure against feeder cattle and live cattle. We really just haven't seen much in the way of activity from the packers yet this week. I think it'll start to pick up today and into tomorrow. But so far, it's been very quiet affair. I think they are using, the strength in the corn markets and weakness in the live cattle and feeders as a way to try and buy some cattle cheaper again this week. Their margins are starting to get a little squeezed here. They're about $106 a head profit, so that's a far cry from what it was a month or two ago. We were over $400 a head, so I think it will start to pick up, but it's probably going to be at that steady type money, maybe even a little bit softer compared to a week ago.
So with the crude right now about $6 to $7 higher, I want to take a look at the Dow just for a point of reference here. And on the Dow Jones Industrial Average overnight, we're up 168 points at 33,435. Kind of interesting. They don't usually go the same direction. Now, when we closed up yesterday on live cattle, we had the April contract 90 cents lower at 140.52. The deferred contracts were a little higher. October was up 35 cents. What does that spread mean?
Yeah, it's probably going to see more spreading like that, a little bearish spreading coming into the market, because the idea is that instead of saying a lot stronger cash trade this week, we're going to see a little softer trade because of what's happening with feeder cattle and the higher prices of corn. So we are seeing some unwinding of bull spreads, a little bear spreading coming into the market, probably going to continue in today's session as well, at least initially.
Feeder cattle were down 220 on that April contract at 159.80. And if we look at how we finished up in the lean hog trade yesterday, well, it was an up day all the way around. And you had April up 270, May was up $3.22 yesterday. We'll see if they follow through today. Brian, thanks for the information. Brian Hoops of Midwest Market Solutions. It's going to be another big day, Janet.